everyone, and welcome to this session. Apologies for the slight delay in the start. We were just checking our audio, and it's okay at our end. And if it's okay with us, then I know it should be okay with you. Thank you also for taking the time out to come and join us to see what is happening on the market and discover a little bit more about how you can apply volume price analysis to both your trading and your investing. But as always, before we start, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading and investing can be a risky business, so please don't ever think of using money that you cannot afford to lose. Right. One of the reasons why we've moved this particular session to this time is that the markets do actually tend to pick up a little bit, rather than try and do the open where you have all that volatility and a sort of lack of general direction as the market, as the physical market settles down. David and I decided to consider this time. It's about 6 o'clock here for us in the UK. I think it's just after lunch, David, in New York. Perhaps those of you in the States can confirm. And certainly by looking at some of the charts, certainly for the SPY and the Qs, it kind of gets its second wind, as it were. If you are going to get a nice move, it's likely to happen now. And that's what we were hoping to capture. Now, clearly today is a little bit different because obviously it's Thanksgiving tomorrow and market's going to be closed, and also we've got early closing on Friday. But moving forward, we think this is really a nice time to have it, because we'll have what's happened at the open and just after. We've had a little bit of a pause for lunch, and now, as I said, we've got the second wind before we go into the close. So therefore, what we're going to do is excuse me, we're going to see if we can look, hopefully we'll have enough time, to look at three very different companies and charts. One of them is ARM, as you can see up on my screen. This is the 5-minute chart. I also want to have a look at NVIDIA, because obviously we had the earnings there, and it's NVIDIA is a stock that I've actually been tracking since the beginning of this year, and yesterday was really, really a significant potential inflection point for the stock. And I also want to have a look at Disney. And the reason I want to have a look at Disney is because I mentioned on my Twitter X feed that David and I were looking at some stocks, and Disney was one of the ones that came up. And there are some really, really nice VPA examples. And I promised them that I would look at it and go into it in more detail. But the more I try to shoehorn it into individual tweets, I thought, this is ridiculous. This is, I'll have to do like 50 of them. It would be so much easier if we just incorporate it into one of these webinars. You guys can listen to it as well. It'll go up on YouTube and then they can have a link to it and take it on from there, because Disney is a really interesting chart. It's also a very interesting company for all sorts of fundamental reasons, but it's the technical picture that we see on the chart. It's got a number of lessons for us. But this is a little bit unexpected, the ARM 5-minute chart. It was when I was looking at my X feed, I'm followed by a number of trading groups. They all under this, what they use, Discord. It's little communities, trader communities. Sometimes they ask me along to go and have a chat to the community and to talk about VPA. And the thing that characterizes these communities is they all have adopted the concepts of volume price analysis. And what's really, really lovely is they've taken the concepts and then they've, if you like, made it their own. They've then added their own spin on it. They use their own indicators. Some of them are standard, some of them are proprietary. I think one or two of them even use the ones that David and I have developed through our quantum trading company. And it's just a joy to communicate with them and to discover just how successful they are being. Some of them trade the stock directly, others do it through ODT options, but it doesn't really matter, because what they're proving is, first of all, that the methodology works, that we look at the price action, the volume, and incorporate the other elements of VPA, which are support and resistance, candles, candle patterns, and of course time. And by that time, I mean obviously multiple time frames as well. And it was just a little tweet that caught my eye. He was so pleased that ARM had delivered a really nice trade just before the Thanksgiving holiday, and he was going to have a great time. And I thought, well, good luck, simply by following these principles. So ARM isn't a stock that I have on my radar, and neither does David. It's a company we know very well because it was recently taken over. I think it was, wasn't it? But it's a name that's been familiar to us here in the UK. So I literally pulled up the 5-minute chart, and as soon as I saw it, I could see exactly why it delivered what it delivered. So if you've got access to a screen, and you can pull up a chart as well, and you can listen to me at the same time and listen to David, it's a really nice way of really focusing in on what we want to highlight. We try and capture as much as possible of the elements of VPA, but obviously, we are constrained for time, but I just want to give you an overview of it. And if we go to the 5-minute chart here, what we see, this is obviously the open, and as always, you will get an inrush of volume at the physical open. It's obviously been trading in the pre-market. You can glance over and see what has it done in the pre-market. Pretty much. Not very much. If you want to see the kind of how the volume corresponded in the pre-market, what you have to do is you have to move the physical out of the way, and then that brings that up. You can sort of have it, because volume is relative, and you have to see it in the context of the session. So although when the physical opens, obviously the volume is exponentially greater than it would have been in the pre-market, it doesn't invalidate what was the price action and volume doing in the pre-market. It was just restricted to fewer market participants. But this is what normally happens, and you see this on the indices, and you see it on the stocks as well. You have this inrush of volume. It pushes the price up. What we can say about the pre-market is that ARM has established this very, very strong platform of support it's about the 60. I've got 58.90. Let's say 60, almost $60. As we see here, we know it's strong because this is one of our own indicators. This is the accumulation and distribution. We know it's very strong. We've got 2, and it's the thickness of the line. That gives us a very strong visual clue that this is a strong level. And what happens is, if you can measure the strength of a particular support and resistance zone or region, as we can with this indicator, what it tells you, first of all, support will be very strong, resistance will be very strong, but when you get to the region, it is going to take a lot of volume and a lot of effort to actually get through. And this is what we see when we come to this candle here. But basically, it does nothing. What it also does, we have this other indicator called the volatility indicator. These are little purple arrows. This tells us that this candle, this price action of this candle, was outside of the average true range. And what tends to happen is when that is triggered, the price action then retreats to within the spread of the candle, which it does. We also have the volume point of control. This is the region on the chart, and as the price action developed, here it was at our time 2:30. Let's go over here. Certainly, for the first hour and a half, as it were, the price wasn't going anywhere. It was, if you like, it was being transacted. First of all, within the spread of this candle, it wasn't going anywhere. So if you are looking to take a trade at the beginning of the session, sometimes you just have to be very, very patient. And this is what this combination of this indicator tells you, the volatility and also the volume point of control. This is volume and price over time. So we know we're not going anywhere. At the same time, it is also building a nice platform at 60.24. That is providing the platform. So if we have a bias to the long side, what must we see? First of all, from a support and resistance perspective, we have to see that hold, and we have to see that the price action go beyond the volume point of control, and then we look above and we say, oh goodness, then it's actually got to get beyond 61. So all these things put together, as the session moved forward, this isn't going anywhere. So if ARM is one that has delivered for you before, and I know for this particular group it has, they just have to be patient. Patience is really, if you're looking for a directional trade in terms of either a put or a call. If you have any other strategy, this may not be particularly relevant. But let's take it on a straight directional trade, if you like, long or short. While we look at this, if you like, this congestion, this sideways movement, what do we actually see in the volume? Of course, we've had this inrush at the beginning. It then tends to die down underneath the candles, except for here. This is a very interesting candle because there's a lot of volume gone in underneath it, but it has although it's a down candle, it has a reasonably deep wick to the bottom of the candle. So you could say, well, that's mildly encouraging. Then you have an up candle with, again, it's really nothing to write home about, and you've got the volume point of control above it. And then you have a succession of candles where the volume is falling away. And you tend to find that in congestion phases. The volume just tends to die down. And the only thing you can do is sort of see, well, is there any differentiation? Do you see perhaps more in a down candle or, more in an up candle? Sometimes you can't, and you simply have to be patient. Then this is the candle that is significant. The volume is substantially higher than the preceding candles. But the interesting thing is the volatility indicator is triggered once again, and it's almost as if the volatility is triggered and you get momentum as a result. So this is what it has taken, first of all, to push it beyond the volume point of control, and also push it beyond this strong resistance. Now, you see the potential for this, let's call it this breakout, because it's been moving sideways. And now the question is, well, is this going to be sufficient to take it higher? How do you know that this is not just going to be a fake out? Because you have this very strong resistance, but you also know that it will then provide very strong support. And this is where really I think VPA gives you that, what people call the edge, because it's in the pullbacks. What do you see when either when a trend starts to get underway or when it is in a trend? What is the volume telling you? So we have this rush up. Nothing seems to happen very much on the next candle. So you think, oh, well, that's just going to be another fake out. And it comes down, and it does come down. And then you have two little candles. But what does that tell you? That is what is going to give you the confidence, because it goes down. That's actually wider than that candle, but it's lower volume. So what does that tell you? It tells you that this is just a pullback, and the chances are it is going to go higher. And it does. It starts to creep higher. Very sort of, the volume tends to fall away on that one, but it's a very narrow candle, but it carries on. And I suspect, in fact, I'm more than suspect, knowing how these guys interpret a VPA, this is what they would be looking at, and so on. Now, once you decide to take a position, then as it's always the most difficult thing, is actually staying in that trade. And this, again, is where VPA comes in. So it goes up. Yep, there's a little bit of fall away of volume, but the next one, the volume picks up again. Then you have a little down candle with this candle here. But look at the range of that candle. It's very, very narrow. And given the amount of volume underneath there, that's simply, there's buying in there. There has to be, because if that was all selling, if we compare it to, say, let's have a look. This candle here, for example, that's a much deeper candle, a little bit less volume, But that is tiny. That is such a compression. When you get compressed candles, those are the ones that you just pay attention to, where they appear in the move, and whether in fact they are simply a pause and more buying going in, which this is what this turned out to be. The next two that we have on the down, we have a repeat of that little pattern there, and that really tells us that this has got some legs, and then it takes off again. What's interesting, the next question is, well, when's it going to, where's it going to stop? This is also interesting. This is another narrow spread candle with a reasonable amount of volume, but it doesn't fall and it carries on. These three candles are quite interesting because you have rising volume, but you also have the spread of that candle is really not much more than that one. And that is possibly kind of signaling that it is coming, there's a lot of effort going in, but it's not going to go any further. This is when your multiple time frames come in, and you look at, maybe I have the hourly chart, and we'll see what is actually forming on the hourly chart, and to see whether in fact it is just running out of steam. And that is what we had here. We've got the price is rising, but the volume is actually flattening, if you like. There's no follow through on that one. Or you can use a 15-minute chart, or you can use a 30-minute chart. What that actually gives us is we end up with what we call a two-bar reversal. We see a lot of two-bar reversals, certainly in the Forex market. If you overlay one on top of the other, you kind of get a shooting star. And this is when we've had this reversal here. Now we're coming up to the 6 o'clock. As I said, it's now going sideways again, primarily because tomorrow is Thanksgiving, and as I said, the market is just quietening down. The market generally, moving into a holiday period, it likes to end on a high. Whether that's going to happen today, we'll wait and see. Or it simply just doesn't do anything. Where have I got here? Let's have a look. Have I got the SPY here? Let me move that to the SPY, and we'll just see what that's up to at the moment. So it will just, there's not, the volume will fall, and it will just not go anywhere. As I said, normally at this time, you do end up with a really, really nice sort of potential for a trade. But I think today it will, as long as it can post some kind of gain, as it were, the headline, the media will be pleased. Everyone can go away for the holiday. It's done what it's supposed to do from a seasonal perspective. Everyone goes away, comes back, and then we can think about the end of year rally as we start the new trading week next week. I'm going to stop there. If you've got any questions, just pop them into the chat box. I'm going to pass over to David. He's got some things he wants to show you as well. And perhaps we'll come back and look at, as I said, Disney and NVIDIA in particular. So I'll just pass over to David.